This episode of Market Talk is brought to you by Growmark FS. Keeping up on the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic grain and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. Well, as we take a look at the market trade action we saw on Thursday, definitely some positive money flow to discuss, a few things to take a look at. Joining us here today to discuss everything, always one of my favorite conversations of the week when we have him on, Bryan Doherty with Total Farm Marketing. Bryan, good to catch up with you again, sir. Hope you're having a good week.
Jesse, we are. Thank you. Those kind words. Yeah, an interesting week for sure. A lot of green on the scorecard today, so it's always sometimes easier in these conversations when the market's up rather than down. But it's not green everywhere. So we'll go through that. But yeah, nice export sales number in soybeans, and then we had some daily announcements out of China and unknown destinations. In that roughly, let's call it 13 million bushel total, additional to last week's. I think it was 78 million metric tons. So just a really, really robust number there. Export sales for the year are running ahead of last year's pace. So
Yeah.
that is really, and it's been that way for a while, but it's staying up considering we didn't really see any big numbers on the weekly basis, and you've got these problems with the Mississippi. So as I look at the year-to-date total, soybeans 1.121 million bushels. Last year at this time, 1.068. So roughly 53 million bushels more than a year ago, Jesse. Really good numbers there. Beans had a good response today. Ironically, the corn market's up 5-6 cents today, holding really well despite lousy export sales numbers.
Yeah, and thinking about those export sales, that seemed to be the headline of the day that gave us that opportunity for some positive money flow. That and maybe the dollar breaking a little bit, Bryan. But talking about those export sales, it's nice to see a positive day in the gut slot of harvest with all the different issues we have out there, and we've kind of leaked lower to begin the week, but we almost, for the most part, kind of recovered our losses of the week, at least in soybeans, getting us back up around that $14 level again.
Yeah, and that's getting closer. We're not quite there, 13.91.5 on today's close, but some good positive fundamentals in the short term for beans. The negative is we talked about it last week. We're probably going to talk about it for weeks and weeks, maybe, I don't know, but it's the Mississippi River.
Yep.
And whether or not you can have all these sales in the books, but if you can't get the inventory to where it needs to go, that is a concern. And then, of course, each day we inch a little bit closer toward, at least perceptively, this large Brazilian crop that is on tap. And so they got to plant it, they got to, weather it, they've got to grow it, and they've got to produce it, and then they've got to harvest it and then get it to where it's got to go. But there's going to be a lot of beans high expectations out of Brazil this year. So beans, still trading a good dollar, more than a dollar off the recent highs in September when they peaked at over $15. Corn did edge over 7, backed off, but still hanging in around 685. Boy, this is 6 weeks in a row. I just say, 685, give or take a dime to 15, and that captures the last, let's call it, boring trade from corn for the last 6 weeks.
Yeah, and thinking about that, quote unquote boring trade, I've said it's kind of like watching paint dry in this corn market, but it feels like both corn and beans. I brought this up a couple times this week. It's that psychological resistance level, $7 corn, $14 beans, and we just can't seem to poke our head above that and break through it yet. We're not completely falling out of bed right now, Bryan.
Well, we aren't, and beans have a wider range. But to your point exactly, what happens often around the harvest season, into the harvest, or at certain times of the year where there just isn't the perception of big market moving news or something that's, a dry pattern that's getting drier from June to July. this is harvest. So dry weather and harvest, allows harvest to go along at a rapid pace. Um, but we're trading sideways. So it becomes what I call a trader's market. So as we get up to that psychological $7 area or just up in that window, traders sell, farmers sell. When it backs off, they just kind of let it back off. When it gets down towards support, becomes a buyer's market, and then they buy. And if you've been range trading, you've had the window of opportunity to do that. I think in that window, to get a little technical on what we do, I would probably tell you within that range too. When we rally up, we like to sell call options. So above the market, collect premium. The market drops. We'll look at maybe some type of a put sell in the market. But it's a range bound market, so it kind of comes self fulfilling until we get something to sort of break it out. And a couple of times it looked like we might break out top side, might break out bottom side, and we haven't. So the more it kind of self fulfills sideways, the more people buy the dips, sell the rallies, and that's kind of where we're stuck right now.
What about the cash side of things here this week, Brian? What are you seeing there? I know we've had our issues along the river, but I'm hearing maybe some firming on the interior in some spots, whether we're talking corn or beans. But, for some farmers who are looking at maybe some cash sales off the combine, what are your thoughts there?
Well, unfortunately, it depends where you are in the Midwest. So if you're
Yeah.
in that interior, especially that Mississippi area, it's been pretty rough. Also, these basis levels have declined. They might have come back a little, but they're still net overall down. Basically, I'm going to simplify it, say more the further west you get, the tighter these basis levels get. Talked to a farmer yesterday in west central Illinois. Really pleased with his yields. 8 cents over on the board, selling right out of the field. He said we never do that. Now they're doing it. So the market's wanting his corn and it's willing to pay for his corn. And so we're seeing sort of that west to east on the map, higher basis levels west. Um, it's going to be interesting because I think what you're going to see this year is a really difficult and challenging year where we see um, farmers who sold ahead enough, they're not going to sell for some time. And the basis is going to have to lead the rally higher again. And talking to a farmer in North Dakota today, just anecdotally, he's a big farmer there. He indicated that the wind over the last week has just been ferocious. I know I was in South Dakota last week. It was like 40 miles an hour just trying to open your car door. Tough to do. But he said they lost a lot of corn. They just got basically blown right off the stalk. So,
Mhm.
all those little things that I think continue to tighten basis ultimately from west to east.
Well, and I know as well for some farmers on that cash side on sales there, I know they have different opportunities too, especially if they don't want to store it. Say they don't have the on-farm storage, they don't want to store it at the elevator. They're selling, but they do have some opportunities for re-ownership as well if they want to. It just depends on the situation, Brian.
Well, it does, typically, I mean, my advice to be look if you're going to re-own, why are you doing that? So obviously, I think the
Mhm.
market can go higher, but for some, it's look, I don't have enough storage space. So now, what type of re-ownership? So some have said to me, look, I was going to store anyway. I don't have room. And when I store, I'm at the market risk. So I'll buy futures. So you get a better bang for your buck if corn rallies from when you buy it. Others, if you're not sure that you want to take on that type of risk, well, then do something in the option market where you can probably go longer in length, get some time, fixed risk, get in front of it, and now you're just there. And when I say there, the old saying is showing up is half the thing. You're showing up. You're there. If Brazilian weather, Argentine weather, whatever, this war really wreaks. If this corridor channel doesn't get extended or it closes down, the markets are primed for really fast, stronger gains down the road, and you're in for that. So that's how I would handle that market.
How about out to 2023 on quartered soybeans? We can't forget about that. Has any of your thought process changed there from the last time we talked about that?
The analytics of the market will say, hey, look, if we average 180 yield and we increase acreage, a million acres in corn, carryout's going to rise to about 1.8, 1.9 billion. So the market doesn't have the urgency on that contract. And so 6 1/4 is kind of all we've been getting out of this thing lately, give or take. And that's where it finished today, right at 625, up 4.5. Um, at some point, you hope your first sales or your worst sales, a pivot point. I'd say if in doubt, start making some sales and hope to be wrong. But if all the stars align for the bears over the next 6 to 12 months, it's unlikely we'll see 625, most likely 525, because that means Brazilian production increases, Argentine production increases, U.S. increases, acreage has more crop, the war gets settled, China has a good crop, and all of a sudden we wonder what happened. Where'd all this corn come from? So that would be the argument. But there's just as many out there that says will tell you just be very patient. There's no reason for that market to go higher now, but it'll go higher later to buy acres.
Bryan Doherty with Total Farm Marketing is our guest today here on the show. Bryan, let's talk about the wheat market. A positive day at all three classes there on Thursday. We've had extensive discussions about wheat, though, tied with the Russia-Ukraine war and the dollar, et cetera. But as you look at wheat here, what are your thoughts? I know export sales are still looking kind of rough here ish, and I'm curious what your thoughts are on this wheat market right now.
Yeah, so and you have a great point there, because when we do look at the sales, they're not like lousy or terrible, but they're not robust, and they're not leading this, let's say market higher with stronger cash. So as you kind of look at the bigger fundamental picture, you kind of look around the world. Um, Australia getting a lot of rain lately, so there's some quality concern issues there. Um, Boy, I think in the U.S. and some pretty good wheat producing areas, you gotta wonder if farmers planted it or can get it planted. We've heard from more than one that said. In fact, one I talked to today. No, this guy I talked to in North Dakota, but he said, "Hey, look, I didn't plant X number of acres, and they were a large amount because we're so dry. And then, one, it's dry. Then two, I'm afraid it'll rain just enough to germinate, and then it'll dry out again and kill it. So we didn't plant it." Southwest Plains, difficult. Take China was releasing some wheat out of the reserves this week. Tells me that they've got high internal prices, so maybe they're in the market. Um, yeah, the wheat's kind of an enigma. I think it's a market that all of a sudden took off a dollar, more than a dollar, and it looks like a really good buy, but it doesn't seem like there's a real surge into the buying side of things. I'd like to think the market kind of just has primed itself now. It's on a springboard and it's getting ready to move. I just think there's too many issues and concerns worldwide for prices to slip from here.
I wonder as well. I've heard some chatter that some growers are contemplating the idea of putting in more wheat next year versus some other crops, whether it be corn, beans, or alfalfa, or you name it. They're talking more about putting wheat in. I wonder if you're hearing any of that chatter from farmers yet, Bryan.
Oh, sure. Heard a lot of it all summer and into fall, that they plant more winter wheat and then try and double crop as much of that as they can, the beans or some of these other crops that now might be insurable as a
Hmm.
double crop. I don't know. This weather market, it's been
Yeah.
so dry that, when you talk to a farmer that says, "Hey, we've had an inch of rain since July," that's a really serious indictment of a drought. And you look at the drought monitor map, I don't know if wheat picked up these extra acres. Now, might spring wheat acres be significant? Maybe, but that's a long way off too. Something's going to get planted. Corn right now versus beans. I don't know. I don't like the expense side of corn, so I think beans have it. Beans are struggling, I guess, or running up against big production in South America. So there's no, easy mix in the decision today. I think the good news is farmers don't have to necessarily make decisions today on the new crop, but I would make the same sort of, let's call it even tired argument, that if we get rallies, be proactive, get things started. If we see July Chicago wheat as an example at 950 or 10, that's still a wonderful price historically. If you see beans back over 14 in November 23, start letting some go. You see D's corn of over 650, start letting some go.
Let's move to livestock trade, Bryan. Looking at a fairly mixed day in cattle and hogs. It was rather quiet compared to some of the moves we've seen to begin the week. Your thoughts in the livestock trade? I know cattle on feed report coming up Friday. Maybe traders are kind of square positions ahead of that report, possibly.
Squaring positions, I think stability in the corn market is providing support for the feeders. They were off today, but overall providing support, and they're starting to show some gains. But the real gains is in that live market in cattle. Real just shot out of the cannon sort of run up in December cattle. So, when they sold off, we kind of questioned it, but they consolidated. Now they're back up. So you look at it, if you didn't know the market went down in the last couple of weeks, you'd go, well, all is well. They're holding above 150. It is all as well. It's tight supply. Uh, we had been making the argument that it looks like that the industry has been pulling cattle ahead
Hmm.
and higher corn and all of that. So unless demand really slips, you're going to run into what we think is a tighter supply window now. We've been kind of saying all along the back months have it right. Back futures have been holding premiums. They still are. I like the rally in December. I would argue now we're getting back to that level again where if you're a producer, you might start looking at puts or buy a put sell call, something to defend the downside. I think it's a supply side bull.
Hog market's been pretty strong here this week as well, Brian. That December contract's been doing its best to come back up to the cash index.
Can somebody tell me why it sold off so hard? I still, it just
Yeah.
plummeted. And the only, for me, the only valid news I could find was the dollar was racing higher at the time. So there's some truth to maybe dollar relationship, but that China was releasing some internal supply as well. And again, when you see China doing that, traditionally it kind of indicates that prices are high. So, that's not a to me that's not a big that may be a little short-term bear factor. It's a bull factor, bigger picture. So good surge. We're right back into the 87. Index here is trading around 93. December still below. Now remember, December doesn't have to trade to the index today because it's only October, but it'll gravitate toward that level. Not sure why we'd expect that index to fall off. I know it's demand. Everybody worries about demand, but had some job numbers today that were supportive to the idea that hey, people are still employed, they're still working, they're still going to buy stuff. Nobody likes higher interest rates, and housing market's likely to slow long run. Everything slows down. That's what the Federal Reserve wants. They want to slow this thing down, get this inflation under control. But it looks to me like the hog and cattle markets are where they should be, if not even higher.
Brian, how about that dairy market trade? What's happening there this week?
Yeah, that's kind of the dog. We were up today in November milk, but just have had a kind of a tough week. We had the global dairy trade numbers were off this week, and off kind of not shocking, but confirming that slowing demand out of the Southeast Asia and that part of the world. Um, had a good surge in some of the contracts today, and then gave most of that up. The dairy price on futures, for instance, is trading basically where it was back at the beginning of the year or even further back. So um, that seems to be a market that all of a sudden seems a little bit more concerned about demand. I'm not sure there's any kind of supply issue there. The cow numbers will vacillate, and they likely have, I think farmers who either grow their own feed or are in an area where they see feed, by midsummer, they'll start holding heifers back if they think there's good feed coming. And for the most part, the upper Midwest, Wisconsin in particular, Minnesota, there's good feed coming. So not too worried about so that could create some expansion, but it's limited in scope.
Hmm.
I, you've had strong butter. You just haven't had the strong cheese market. I'm kind of scratching my head at that. Why we're not seeing more sort of holiday buying. I wonder if it isn't going to be kind of a more of a hurry up and rush buy this year than anything else.
Well, something to keep our eyes on for sure, Brian. Before we run out of time, real quick, any final thoughts? Anything you want to reiterate for us here today?
Well, volatility continues to be front and center in a lot of markets. I'll go back to what I said on the grains, new crop in particular. We're in theory, this is it. We should be at our harvest type low. So if we start to recover out of this, Again, maybe the first 25 to 35% of your expected production, I would sell on value. So when you have good value prices and your instincts kind of telling you to get something done, follow your instincts. It's generally made up of something you can't explain, but it's usually right. So go with that.
Definitely. Well, Bryan, if folks want a little advice, want to work with you and the team there at Total Farm Marketing, how can they get a hold of you?
I would appreciate a phone call. That's the best way to do that. 800-334-9779. So that would be number one. Two would be email me, Bryan at totalfarmmarketing.com. Or look up us on our website, totalfarmmarketing.com. Take a peek and lots of resources there.
Well, we appreciate the time and the thoughts as always with that. Bryan Doherty with Total Farm Marketing. Have a great rest of your week, sir. We'll talk to you again next week.
Jesse, thank you. You too.
And that's going to do it for Market Talk today. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.